session. To Africa's problem. So I look forward to a very interesting conversation. I look forward to a very fulfilling time by the time we leave here, that we have not only just talked, but we have identified concrete solutions with steps on how to get those solutions. Somewhere in this room lies a solution to climate change from the financial sector, and we hope to get that. So happy deliberations and welcome. Thank you.
Thank you very much, Mr. Young. Professor Inyang, one most respect. All protocols duly observed. You're going to hear from a number of people today talk about the things that we've been doing and things that we need to do. But as the professor just said, it is what we do together that helps us solve the problem. There's an African saying that says one tree does not make a forest. But certainly when we come together, we build together. My first guest speaker today, and I would like to invite Mr. Calvin Masingam, who is the Director for Risk and Resilience at the the FSD Africa. Make your way here, sir.
Thank you very much, and good morning to everyone, and a warm welcome from my side as well. I'm really excited to be here, excited for the launch of AFAC, and the reason why we're here is because partnership is important, and we at FSD Africa and the Nairobi Declaration on Sustainable Insurance, which I'm representing this morning, really believe that we need to work together as varied stakeholders across the financial sector, various civil society partners, various development agencies, all pulling together to tackle this very significant challenge that we face as a continent. We all know the challenges that Africa faces in terms of climate change, and really now is the time that we need to act, and we need to act together. And so this is what AFAC is about, and really just want to talk about particularly the role of the insurance industry within this collaboration. I represent the Nairobi Declaration on Sustainable Insurance, which is a coalition of now 128 insurance organizations across the continent that have come together to work on tackling sustainability challenges. And so our objectives are very much aligned with those of AFAC. And so we've been in discussion over the last number of months together with the AFAC team, the AfDB, to say let's join forces in what we're doing because we have very similar objectives. And so NDSI is coming to as a collective to join AFAC and to be the insurance pillar of this alliance. And so we're really excited about that, excited about bringing some of the lessons that we've learned as we've been on this journey, but also collaborating with other elements of the financial sector, the banks, the asset managers, as we drive together to achieve the very significant objectives that we need to tackle. And I just want to give you a bit of history of the Nairobi Declaration and just a bit of a flavor of what we represent. So Nairobi Declaration was launched in April 2021 in partnership with UNEP Principles for Sustainable Insurance at a market event hosted here in Nairobi by ICA Lion Group. And at that point, we, as an initial group of kind of development partners like UNEP and FSD Africa, but also key leaders within the insurance industry in Africa, had a similar moment to what AFAC is having now, where we said, actually, we need to take action and we need to work together to really provide African solutions to the climate and broader sustainability challenges that the continent faces. And so 11 initial signatories came together with that Nairobi Declaration. And it's since then exponentially grown to now 128 signatories from across 28 countries. And we have working groups, and we are collaborating across borders to really tackle the big challenges that the continent faces and bring the significant underwriting, capital, and risk management expertise of the insurance industry to bear on the challenges that we face. And insurers are a very vital part of the capital stack. Insurers, through their underwriting, really take on the catastrophic, the risk, the long tail risk, those low probability but high impact events that really can have a seriously catastrophic and negative effect. And so the insurance industry, through underwriting, provides a safety net that is very vital for individuals, for businesses, but also for governments when specifically disasters like climate disasters happen. And so that's a vital role. But also, insurance industry is a risk manager, and through their risk management expertise, they're able to send signals to the market, price signals, but also early warning systems and kind of solutions like that help you to manage your risk better and to mitigate some of these disastrous risks. And in addition to that, insurance has a huge amount of capital that they manage on their balance sheets, and that asset management can be deployed in a sustainable way that can really influence the way that economies move. And so there's a lot of vital roles for the insurance industry, but it's important that that is connected with what the rest of the financial industry is doing. So that's why we're so delighted to be joining AFAC. Just to mention that there's a significant commitment that the NDSI has made on climate at COP27. And really want to thank Dr. Mahmoud Mohideen and the high-level climate champions for we're pioneering and facilitating that announcement, that commitment that we made to underwrite $14 billion worth of climate cover by 2030, which we're now working actually also with the African Development Bank to operationalize. The high-level climate champions have been another significant partner for us on this journey for NDSI, really promoting and endorsing what we're doing, creating visibility, opening doors. And so I'm delighted that Dr. Mahmoud Mohideen is here, that GFANZ also a partner with AFAC. I think it signals that, you know, we're all in this together, and we're keen to work on this. And so, yeah, it's really a delight to be joining AFAC. I think this AFAC partnership is important because we are together driven by a desire to take action, and I think that's the most important thing. We're not coming together to do more talking, to create more policies, to tick boxes, to create a PR exercise. The main thing is that the financial industry is saying that actually in Africa we are facing the most vulnerability, and we need to come together to solve it ourselves, and so to take action. And so I think that's what excites me. It's what we see through the Nairobi Declaration, and which we are excited to see through AFAC as well. And so on behalf of NDSI, just delighted to be here, and thanks to the AfDB team who've really worked hard on this, and to all the partners, and look forward to all that we're going to achieve together. Thank you very much.
Thank you very much, Calvin. And for those of you who are trying to figure out what FSD stands for, that's Financial Sector Deepening Africa. They've actually been and had a leadership role on the continent in trying to bring people together and educating, especially advocating, but not obviously now talking about transactions. We've worked with FSD in the policy side of things, regulatory, and of course, they have been fundamental in some of the green bonds issuance on the continent. And I'm glad that they're here to be part of this conversation. Thank you very much once again, Kevin. We are now going to hear a recording from Mr. Eric Usher, who is the head of the United Nations Environment Programme's Financial Initiative, UNEP-FI. A recording by him will now be shown. Thank you.
With you all today, and I'm only sorry that I'm unable to join in person, but let me take a few minutes to relay some comments, experiences, and certainly aspirations. First of all, big congratulations to the African Development Bank, to the Global Center for Adaptation. It's my great pleasure to speak with you all today, and I'm only sorry that I'm unable to join in person. But let me take a few minutes to relay some comments, experiences, and certainly aspirations. First of all, big congratulations to the African Development Bank, to the Global Center for Adaptation, and all the partners involved with the launch of AFAC. You know, it's these types of collaborative spirits and alliances that the African continent needs to prepare for the climate transition. Now, the climate crisis is clearly the biggest challenge facing humanity today, compounding emerging public health risks such as COVID-19, and of course, geopolitical and global environmental threats. And meeting the many sustainable development goals will require greater climate resilience, particularly in the most vulnerable regions. And scaling up climate finance is going to be critical for this. And we all know that public resources have limited capacity to grow, so private financing is going to be essential in meeting this demand. Now, at the UNEP Finance Initiative, we see the finance sector in Africa increasingly involved in discussions on the climate and SDG agendas, and I know this will be much discussed during the course of this week. Many in the finance industry support the Paris Agreement. They see the need for a price on carbon. They see the need to build resilience to a warming climate and to invest in low carbon businesses and technologies. And regulators, of course, as well, are also getting engaged. For example, Egypt's central bank published in 2021 sustainable finance guidelines mandating Egyptian banks to manage their climate risks and engage stakeholders in advancing sustainable finance agenda. Similarly, the Central Bank of Kenya has released guidance on climate-related risk management, with banks expected to submit quarterly updates on their implementation progress. So these are just two of a number of examples of how governments and regulators are increasingly committed to aligning financial flows, both public and private, with the Paris objectives. But of course, these objectives require collective action. They require cooperation and dynamic multilateral collaboration. And AFAC provides the space for this. You know, it's really set up as an industry-led African alliance that provides African financial institutions with a collective voice on climate issues. We hope the platform is being positioned to support capital mobilization for Africa, reinforcing Africa's voice in global discussions and enhancing Africa's sustainable finance capabilities. Now, UNEP-FI, we're proud to be an implementing partner of AFAC, and so let me give you a couple examples of what we can offer banks and insurers in the region. UNEP-FI, UNEP Finance Initiative, we are a partnership of the UN with more than 500 member banks and insurers, plus over 100 supporting institutions globally. Over the years with our members, we've established some of the most important frameworks for defining norms for responsible conduct across the finance industry. The principles for responsible banking, which were launched by the UN Secretary General Guterres in 2019, today includes 330 banks, accounting for roughly half of global banking assets. Now, this framework, the PRB, provides essentially a structure, a framework for a sustainable banking system. It helps the industry to credibly demonstrate its positive contribution to society. Now, signatories of the PRB, they aim to set somewhat of a global benchmark that guides banks, including defining their purpose, their strategy to create value for society and shareholders, while enabling them to be competitive, to remain competitive, and to seize the opportunities in a changing economy and society. Now, individual signatories must report yearly, and from year 3, they must have this reporting assured. Every 2 years, biennially, the signatories get together and are required to issue a collective progress report. The first progress report provided some interesting statistics. For instance, over 90% of signatories have already identified sustainability as a strategic priority for the banks. The large majority have embedded it within their governance, typically at a board or C-suite level. Over 90% have begun the process of establishing impact analysis systems, so understanding not only the risk-return attributes, but also the impact attributes of their businesses, their portfolios, their individual transactions. And signatories at that point had together were working to mobilize over $2.3 trillion US of sustainable finance globally. Now, the second biennial progress report is actually due out this September, so very shortly. It's going to include the independent view of the PRB Civil Society Advisory Body, which provides important inputs to the responsible banking community as it takes shape. Climate was the first impact area to be launched by the PRB in 2019 and has since catalyzed the Net Zero Banking Alliance, which is part of GFANZ, which you're going to hear more about today. However, many banks, particularly in Africa, are facing much more material risks from the physical impacts of climate change. And that's why the PRB will be launching target-setting guidance on climate adaptation in November this year, with the guidance being piloted by participating banks in 2024. The second major framework we have is the Principle of Sustainable Insurance, which was established in 2012. And as of today is applied by roughly 30% of the global insurance industry as measured by premium. Now, PSI signatories work to integrate sustainability across all activities in the insurance value chain, so identifying, assessing, managing, and monitoring risks and opportunities associated with ESG issues. The PSI hosts, together with the Vulnerable 20 group of countries, the Sustainable Insurance Facility, which aims to widen insurance coverage and scale climate resilience finance for medium and small size enterprises in low-income countries. PSI is also providing support to the Transitional Committee tasked with establishing the Loss and Damage Fund that many would believe is the most significant outcome from COP27. And we're also involved with the Nairobi Declaration on Sustainable Insurance, African Climate Risk Facility. And finally, the third major framework is the Principles of Responsible Investment, which was the first such framework established in 2006 by UNEP-FI and the Global Compact, and now applied by over half of the world's institutional investors. Now, this framework aims to understand the implications of ESG factors and how its signatories can incorporate them into their investment and ownership decisions. Finally, we're also working with a large grouping of bilateral development finance institutions through the Adaptation and Resilience Investor Collaborative to scale private finance of adaptation solutions. And all of the DFIs involved are active in Africa and have identified climate adaptation as a key priority for the region. So these various frameworks establish the norms for sustainable finance, providing the basis for standard setting and helping to ensure private finance fulfills its potential role in contributing to achieving the 2030 agenda for sustainable development and the Paris Agreement on climate change. Supporting financial institutions to navigate this quickly evolving market reality, integrating sustainability considerations fully into financial practice. It's no longer a luxury, but it's an absolute priority and a necessity for responsible conduct in the 21st century. We look forward to engaging with financial institutions in Africa on AFAC, but working together to get this done.
A big thank you to Mr. Eric Osher for his delivery just then. And as you can see and you've heard, there's a lot of work which had gone into the policy side of this conversation. A lot of frameworks have been developed. And I guess the conversation is named over. Well, things usually and were in the past, voluntary reporting is begun and increasingly becoming mandatory. And of course, the financial sector needs to apply and abide by this in order to actually be able to not prove what they're doing in terms of the impact indicators and the exposure to climate risks, but more importantly, without this and without your reporting, a lot of the monies we're talking about certainly will not be mobilized. Just to move forward rather quickly, I would like to invite Mr. Charles Namechena, who is the Regional Director for Africa Global Center on Adaptation, to present his address, please. Thank you. Round of applause.
Thank you. Good morning. All protocol observed. I think it has become clear that governments cannot drive the adaptation agenda alone. Business is to play a vital role. We can see the momentum starting to shift. Since the Paris Agreement, almost 2,000 businesses across the world have committed ambitious science-based emission reduction targets. Some global companies are starting to develop climate risk-informed business strategies and investments. However, building climate resilience of business is not happening consistently at scale and speed. Business as usual will not work. Evidence tells us that adaptation is the business of business. Because of climate change, business assets are damaged. Supply chains are disrupted. If you invest in these companies without adapting to the impacts of climate change, your investments are at risk. Ahead of Davos this year, 100 major businesses reported financial cost of physical risk of exceeding 10% of their annual sales. This alliance of financial institutions and partners led by and anchored in Africa reflects the need of the moment. I am pleased that at the Global Center of Adaptation in the African Development Bank, we've partnered to launch this ambitious program under the umbrella of the Africa Adaptation Acceleration Program. And also yesterday, you heard from President Ruto his emphasis on the important role this AAP is playing in driving Africa's adaptation action and agenda on the continent. To date, we have worked to influence more than 5 billion worth of investments from working with the African Development Bank and the World Bank, and this is mainly through the public sector. And with you, we're happy to launch business lines to drive the same impact working with the private sector, which we are now venturing into. AFAC's core purpose is to enhance the role of financial systems in Africa, to understand threats and opportunities of climate change, and to mobilize capital for climate responsive investments. Through support under the AAP, the African Development Bank and the Global Center on Adaptation, we work with partners around the table and across the continent, the world, to converge towards measurable action and impact at scale. Colleagues, climate change is a threat to financial bottom line of businesses all over the world. Climate adaptation is a business imperative. Your presence here today is the starting point, and we are happy from the Global Center on Adaptation to work with all partners to drive this agenda. Thank you.
Thank you very much, Mr. Mamechena. I guess, just then a number of statistics, numbers were actually set out. 10% is actually a number that I remember being said in terms of fiscal risks and transition risks to businesses. But I guess some numbers that actually might be of interest to you. When we talk about climate change and the impacts of climate change in Africa, it would be interesting to note that 20 countries are responsible for 80% of the world's emissions. And whilst we band around the numbers of Africa only being responsible for about 3 to 4% of global emissions, the fact remains that we obviously suffer the impacts of climate change more than any other continent. And the real tragedy of climate change on the continent and the exposure to physical and transition risk as we go forward. And as businesses get starved of the finance that they need to develop, the real tragedy is actually not just in our food security as agricultural businesses fail, or the energy poverty that we suffer and the impacts on the development for industry. But even on the ground itself, it drives things down to child poverty, where girls are actually sent into early marriages just because families can't feed their children anymore. We see on the news every single day our brothers and sisters crossing the Mediterranean into Europe because they're leaving Africa behind. Talents among our professionals moving to Canada and Europe when we need all of this potential investment here. But that can change, because if we have reasons to stay here, nobody will leave. This is, as we know, the most resourceful continent in the world. We have all the resources we need, but potential itself is not enough without finance. I'll give you some numbers that just might make a difference to you. The population of Africa today stands at 1.4 billion people. It's projected to grow to 2.5 billion by 2050. That tells you that with an average age of 20-year-olds on the continent, the number of jobs that we need to create is certainly much more than we're doing today. But it actually goes beyond that. It also talks about investment in soft infrastructure, education, health services, transportation, energy. But the reality is the opportunities are here. Financing businesses is not just the government. We need the private sector at the table. Why? Because today it actually costs African countries 4 times more in its borrowings than the USA, and up to about 8 times the most influential and the richest of European countries. This needs to change. But sadly, according to the recent reports of climate change by Climate Policy Initiative, African only has 14% access to the financing needs. The reason why we're here today is to talk about how this can be changed. I would like to invite to the podium Dr. Mahmoud Mohiddin, who is the UN High-Level Climate Action Champion of Egypt, COP27, and chair of GFANZ African Advisory Board, and also the partner today and co-signatory on this initiative, which has been launched today. Sir, the table is yours.
Morning to you all protocols observed. It was really a pleasure to be invited. Great to listen to all previous speakers, including our very engaging moderator with his good updates on substance and numbers. And of course, all of the speakers contributed more to our priorities and our objectives from this partnership. It happened that yesterday late and this morning very early came across two of they said, I didn't say it, my students. One of them is our ambassador to Kenya. I taught him economic theory, and the other one was successful in another area, a top investment banker in Singapore. And both of them in different ways reminded me of a question that I was imposing in my first encounter with the students at Cairo University. A question that I told the student then, it will be the first question in their exam. So it cannot be more open and transparent than this. And the question is very simple. Does finance matter? That was basically many decades ago, and listening to the speakers today, they are confirming in different ways the importance of finance, which is basically beyond simple funding. It's about discipline, it's about partnership, it's about successful arrangements for managers. You can just arrange, and then whatever outcomes is going to be about the dynamics of the partnership. And on GFANZ, I'm very grateful to colleagues who are working hard for a kind of exceptional competition, because finance is about race against time and factoring in time in our consideration. So GFANZ as a global initiative came from preparation for Glasgow by two leaders in their own right, Mr. Bloomberg and Mr. Mark Carney, and with them leaders in finance and business around the world. We created the networks specialized at the regional level. We have a very active chapter led by a very good friend in Asia, the leader of financial regulation in Singapore. And another one is under construction or about to start in Latin America. And now we have the African chapter. And each time we meet and have a board of the advisors to the GFANZ later today is basically about what we can really be doing better in competition with the emerging regions of Latin America and Asia. And here the numbers are telling us that we still have a great potential and great gaps to close, especially with the private sector finance to development and climate. If climate finance is supported by the private sector in the ratio of around 15%, that exceeds 50% in the case of Latin America. And it's more than that in some individual countries in emerging markets in Asia. So that can tell us something about the role of the private sector in closing gaps, not just, as colleagues mentioned, of public finance at the national level, but the partnership required with the formidable, well-established institutions that I had the pleasure in working with for many years, including, of course, the African Development Bank. And I'm happy that the African Development Bank is very much involved with the GFANZ in different ways as members of the advisory board. And we have as well our good active director of activities on whom we are relying a lot in coordinating our work as a good hire from the African Development Bank. We have him with us, Timothy, today. And I'm happy as well that all of these young minds of colleagues working with us to support the work, either from GFANZ or from the group of the climate champions, including Alex, who's here, and of course, Sagawika. And with this kind of partnership that we are celebrating today, you may agree with me that, and based on just what we heard from the different institutions, here the role of development finance, the role of ultimate risk mitigators in the insurance business, and many bankers as well in the room at the national and the regional level, we can tell us something about the potential of our work and this kind of race against time, not just a competition between the different chapters of GFANZ, but definitely listening to leaders yesterday and the day before yesterday are really seeing those numbers that we need really to challenge and the gaps that we need to bridge and the opportunities that we should realize when it comes to climate, and I emphasize development finance. Comes close to the people when you communicate climate finance to them, that climate finance and the climate agenda is coming to solutions. And if we are seeing the typical African country today, either overwhelmed by the challenges in food security or food crisis in some countries, or aspects related to energy and energy access, and matters related to debt and debt challenges. Climate finance can deal with these challenges by providing what we need in long-term finance, affordable finance, more private equity participation, more loan-based solution that can bring more leverage finance by the private sector. Climate action is about a mitigation in the form of energy. It's about adaptation based on the Sharm el-Sheikh adaptation agenda that covers agriculture, water management, food security, investment in infrastructure development, and dealing with the challenges in urban and rural dwellings and settlements. And here, climate finance is being confirmed as development finance at the same time. That was a kind of a false dichotomy that I'm happy that from COP26 to COP27 and now preparing for COP28, that we managed to challenge this false and misleading dichotomy. I'd like to emphasize, and based on the speakers before me, in the areas of emphasis for our partnership, and as we're going to be discussing later on our board, we have three main priorities. One is again trying to deal with this challenge in a nice piece, so that I keep referring to it because it has some practical problems that require practical solutions. The one that is advanced by Mark Carney in preparation for the Glasgow meetings about the country platforms, and where he listed 6 challenges for a typical country to be engaged with when you talk about finance. It's covering areas related to institutional reforms, policy making, rule of law, governance. But again, he challenged us with the fact that do we have a good list of bankable projects? So in the discussion with him, I say, well, coming from the field in Africa, we can prove that we have not just a list of bankable projects, but investable projects. That's not just like about bridging finance by loans, but that could be by private equity participation and a proper mix between the two. And many colleagues worked hard during the last 2 years or so. Actually started in August in Addis, and I was very pleased to see new partners coming from Africa and from around the world, including the Green Climate Fund, seeing many of the projects like projects in Nigeria, in Ghana, Rwanda, Namibia, in different scales of activities and different scales of potential impact, providing solutions in the different aspects to the work. I was happy that listening to these presentations and the potential matchmaking with the experts from the Green Climate Fund. I think this is the first big exposure to Africa here, and in partnership with the African Development Bank as well, that we have seen good examples of how the supply of good opportunities could be matched by interest by the financiers, and the many questions that were raised for these projects, either to be scaled up or to be replicated elsewhere. So this pipeline of investable projects is a continuous dynamic pipeline of opportunities, and we're happy to keep updating this pipeline as a first priority of our work. The second priority, and I'm happy to mention in different ways, it's based on knowledge and technical assistance, which is basically on the capacity building, because when you have the potential funding coming from the GFANZ network or the many financiers in the room here, and the demand that's coming from the field, you might be missing something there, which is basically how the supply could beat the demand, and we can really see bottlenecks in the form of capacity building and preparing better the marketplace and the market opportunities. So this is another area through partnership with UNEP, with ISSP, and others that we can really fix. And the third priority, I would really put it under the notion of financial innovation, or as a neat article by colleagues from the AFC spoke about Finnovation. That covers carbon markets, and I'm very pleased that this initiative, called now ACME, that has many parents and sponsors and partners for developing it, started in discussions while we were preparing the pipeline of projects back in Addis in August last year, and then in Gabon during the Africa Climate Week. And just within a year, we see this kind of partnership between Rockefeller Foundation, the Sustainable Energy for All, and other partners developing the carbon market. And now we're talking about decent, sizable transactions based on carbon market that is designed for the needs and tailored for the needs of the African societies and African markets in that order. We're considering as well the work on debt swaps. We're considering more work in other areas of financial innovation, and all will be shared at the margins of UNGA in a few days in New York, the United Nations General Assembly, and the Climate Week as well, organized in New York. So we're taking these African opportunities from the country local levels to the regional levels to the global discussions in the centers of finance and politics in New York. So let me finish by thanking you all for inviting me to speak, and more importantly, congratulating you on the AFAC's renewed strategy and partnership with GFANZ, which we appreciate. It is important that this is just the beginning of our work, and from today, we take it forward. We take it forward quickly, seriously, and enthusiastically, because only through advanced private and public partnership and the finance towards the good and well-being of the people of Africa, we can really make sure that our partnership are matching its ambitious objectives and aims going forward. Thank you so much.
Thank you very much, Dr. Mahmoud. Whilst the good doctor was speaking, a number of people actually, eminent people actually came in through the door. And I would like to recognize at this point, Dr. Susan Kircher, the Deputy Governor of the Central Bank of Kenya. You're welcome, madam. Karibu. Also joining us from the AfDB is also Dr. Kevin Kariuki, Vice President for Power, Energy, Climate, and Green Growth, AFDB. You're welcome, sir. Karibu. I'm kind of getting worried now because everybody on my list here is actually a doctor. Seems like I'll have to go back to school. Problems, I got to figure out what to study and which unit to go back to. Thank you very much. Can I actually invite Dr. Kevin here just to say a word or two?
Good morning, everybody. Good morning, Mahmoud, my good friend. I think I would want to say very few remarks, to make very few remarks. And the most important thing I want to say is that, first of all, we really support the initiative that we are creating between GFANZ and AFAC, because we do believe that in so doing, we will be able to capture the whole world of climate financing, so to speak. GFANZ has international reach, whereas AFAC and to some extent GCA, we are more Africa focused. So in my view, we all know the amount of climate finance that Africa accounts for today. It's not much, about 4.5% of global climate finance. And a lot of it, I do believe in Africa, the bulk of it is mobilized through the public sector. So the time has come to try and increase the amount of climate finance that we are able to mobilize on the continent through the private sector. And that is why there is this strong drive and why we are very keen to work with like-minded entities such as GFANZ and GCA to complement AFAC's work, as well as the green banks that we are trying to partner with, including CBI here, to try and ensure that beyond what we can be able to mobilize from the public sector funding, we are able to mobilize private sector financing, because that, in my view, is the only way we are going to move the dial of climate financing at the scale that is required. Because I think we are all very clear that if you look at adaptation, for example, Africa only accounts for I think we have about $11 billion, while the demand is about $52 billion. So there is huge amounts of climate financing, both mitigation and largely adaptation finance, that we should be able to mobilize. And that is why, in my view, this initiative that we are going to launch today, the new AFAC, what we call AFAC 2.0 strategy, is very, very important, because what we are trying to say is that beyond the world of public sector financing, there is an even bigger world of private sector financing that should be able to enable us to provide climate financing at the scale and the speed that is required to ensure that Africa is able to meet its climate goals in the short to long term. Let me stop there and welcome you all. This is my home. I come from Kenya originally. So I know we met with Modin out there, but this is generally my home. So I'm really happy to welcome you all to Nairobi. Thank you very much. And I think I'll be invited. Okay, you'll come back.
Thank you very much, Dr. Kevin, for that. Now, you've heard that today, especially in itself, is actually the beginning of a new initiative, Strategy 2.0, as Dr. Kevin had referred to. And even though the letter of intent is being signed today by GFAN and AfDB, it is not a party of two. This is a collaborative, industry-led initiative. It's a party which is obviously, as any other party, has to be started by someone. But a party with 2 people and just music isn't a party until the rest of the people show up. So we have working groups that will be a part of this. The banking sector, the insurance sector, the capital markets, the regulators, the investors, and I believe the insurance. Now, we will be having conversations much later in a panel discussion. So please bear with us as that time will come, and we will explore not just what we've been doing, but what we intend to do collaboratively to move this agenda forward. But before we do that, and before we even get to the signing event, I would like to invite to the podium Dr. yet again, but this time also Professor Tony Oyang, who would actually give us a presentation on the strategy itself and how every one of us in this room not only own it, but will contribute to this. Professor Yang.
Thank you very much, MC. Well, we're trying to set this up. It's quite an opportunity to present this initiative, AFAC 2.0, and to have it launched. I recall 2018, I was in a similar place launching AFAC 1.0. Things have changed, and we have a rebirth. Okay. Things have changed, and we have a rebirth. And that rebirth is what has prompted us to go into having AFAC 2.0. And so, it's going to be a quick presentation focusing just on 4 key issues. The first is we're going to recap again the risk of climate change in Africa, particularly in the financial sector. And then we introduce us to the Africa Financial Alliance on Climate Change for most of us who are not familiar with it. And then we look at the new strategy we've developed, the AFAC strategy 2023 to 2027, and the governance structure. This is a platform, not a specific executing entity, but it's a platform that brings people together. Like I said earlier, we want our arms to go around the baobab tree, but no single 2 pair of hands can actually go around it. We need everybody holding hands together, and we go around that baobab tree. So it's a platform, and we're going to look at the governance structure. Then we will look at how can we get engaged. Everyone has a role to play, and we will be able to identify those roles. So if I ask everyone here, we all know it's a song we all sing, Africa, the risk of climate change, you know, and it's real. It's true that Africa is very heavily impacted by climate change. When you look at the vulnerability index, you find that about 16 out of 20 most vulnerable countries in the world are in Africa. And we've also seen that while this is true, most of our financial institutions are not very up to speed on what it is we are dealing with. I recall the very first day I went to address the Committee of Central Bank Governors in Africa. It's meeting they had. And they gave me 3 minutes and said, please, we're doing something very serious here. We're dealing with economy and other things. And I found it difficult to explain to them that this climate risk we're seeing could actually affect that work you're doing that is very important in the economy, you know. But after my 3 minutes presentation, there, to their credit, they said, please, you have to come back because we need to know more of this. So there has been that desire by the financial institutions to know more. I talked with an insurance broker. Please, he said, don't even go further, Anthony. I mean, because there was a posh estate somewhere on this continent, and each of those houses was insured heavily. And then those insurance came to him as a reinsurer. Then there was the El Nino 2015-16. Then there was a drought 2016. Then there was a fire outbreak 2008-17 and raised down the entire estate. All the insurers came to him, and that it virtually sank the company. And he said, I have seen it, I know it. I wish I knew this earlier. I would have probably known how to price our premiums better, would have known what to do, but this has taken us unawares. Please, we need to know more of this. So I'm glad that the Nairobi Declaration on Insurance is here, that these are the sort of things that we're looking at. And so there is the opportunity for us to really address these issues of climate change, not just as a risk, but the opportunities that climate change brings for us to do things better. And the financial industry has a role to play. No matter what happens, you can talk about the capacity, you can talk about anything, money holds all this together, the finances. You can have all the beautiful ideas on how to address climate change. If you don't have the requisite resources for it, we are just talking. And I'm certain that we have resources on the continent, we have resources outside, may not be enough, but are we playing the role we ought to play? We talk about the fact that 3% of climate finance comes to Africa. Why? It's not because there is a wall, stopping us from getting the money, but most times, are we prepared? Are we ready? We also have developing countries in other regions of the world who are doing more, who are accessing this. Why is it that Africa is not getting the right or the needed amount of resources that we need? We are all here, financial institutions. We have a role to play. And it's very important that, for instance, at the African Development Bank, 40% of our investments are through the private sector. So if we play our part well, we can be sure that just that we have 40% of AfDB's money. Imagine the other financial institutions. So the private sector has a very important role to play in this going forward. So, AFAC, what made us at the African Development Bank, led by the president himself, to think about AFAC, the Africa Financial Alliance on Climate Change? Because we found that there was a lot of gaps. When you look at the Task Force on Climate-Related Financial Disclosures, then 2018, the number of African institutions that signed on to it, very little. You look at UNEP-FI, sustainable banking, sustainable insurance, very few African entities were signing on to it. Why? And we needed the African financial sector to get into that space. So we looked, we did interviews, we found out what is holding you, what is stopping you, and we found that many of them were not privy to the design of those instruments. And so they didn't feel the ownership, basically, of those instruments. They wanted to be a part of it, and they felt, why would a bank here compete with the big global banks, have the same criteria, have the same yardstick for measuring their successes? It wasn't really, they were not interested. And we said, okay, why don't we create a system where the African institutions compete among themselves, peer-to-peer learning, they support each other, and then realize actually that they have a lot to do scaling up. The Central Bank of Nigeria, for instance, started what we call the Sustainability Awards, giving awards to banks in Nigeria that meet certain sustainability criteria just to encourage them. And we saw how it worked. People were competing among themselves, struggling, and we said, this is the right kind of thing to do. So at the continental level, we saw the need to bring these African institutions together. Many of them have graduated and are competing at the higher level. So the Africa Financial Alliance on Climate Change was just to do that, create a platform that brings financial players together. The problem of the commercial bank cannot be solved by themselves. They have regulators. The same thing with insurance. So if we sit together and look at just commercial banks without seeing the wider ecosystem, I think we're just looking at a little fraction of that stuff. And then we also found that if you do not bring the ministers of finance into that conversation, we are missing. So this to me was one platform that brought in all these players, including the sovereign wealth funds, anyone that is important in the financial sector in Africa, it has a space in AFAC. So we then created that, and we realized that this was the way to go. But as at that time, when we started, the awareness was low. So what we basically concentrated on was capacity building, awareness raising, for people to even get to the point of seeing that, look, your work is not just to finance renewable energy. It's not just to finance water projects, roads, but to ensure that you, the bank yourself, that you're safeguarded, that you have things you can fall back on, and that you, as a person, you've shielded your own risk. One of the things that also helped us, 2019, there was Hurricane Ida. I'm sure we're aware of that hurricane. Ripped through Mozambique, Malawi, and where else? Zimbabwe. Destroyed quite a lot of infrastructure, worth about $2 billion. And the question then on the minds of many players was, if these banks, most of these loans they took to build those infrastructures came out of a feasibility on how those loans will be paid back through those infrastructure. Now we don't have the infrastructure anymore. What should they do? Should they come back to the bank to ask for more money to repair those infrastructure? Would the bank provide that money to them? And what if they cannot pay and they default? What happens? So there were strings of questions. Banks, financial sectors now saw the need to come together. And we realized coming together, they identified key challenges that they had. And those key challenges were largely capacity constraints, data, knowledge, how to do it. And so that also informed AFAC 1.0. But a lot has happened since then. We've had COVID came in. We had the financial sector slow down. We've had the war in Ukraine that's affected the finances of, a lot has happened. The macroeconomy has changed. The microeconomy has changed in several of these countries. And we need to take this into consideration. So we then agreed we would do a revamped AFAC, a newer AFAC that addresses all these issues. And that's why we're here today. So that's AFAC. So we developed a new strategy that is from 2023, this year, to 2027. And that strategy has already been endorsed by stakeholders. We've carried out comprehensive assessments of this strategy. We've consulted, and this strategy has been adopted by a wide section of stakeholders. Many of you are here. And the vision is simple, that we want to see that the AFAC's vision is that financial capital and financial products and services are mobilized to support Paris Agreement goal to make financial flows consistent with the pathway toward low greenhouse gas emissions and climate resilient development. This is exactly taken out of the Paris Agreement. Countries signed the Paris Agreement. The financial sector did not, because we are not parties, but we are indirectly parties because we belong to countries and to governments and so on. And so there was a specific goal for the financial sector that we must align our financial flows with the Paris Agreement. We all are aware of that. But then importantly, we also realize there's so much money on this continent. Let me say so much, not because it can solve all our problems. Most times we sit back and we look at the monies that come from outside the continent as climate money. But the banks themselves, the government themselves, are putting in quite a lot of money there. People are not counting. And we need to be able to take cognizance of that and ensure that those resources put in by governments align with the Paris Agreement. And then in that strategy, we have 5 clear outcomes. What are we expecting to see? The first is to build awareness on climate risk, that people get to know that the risk is real and it can affect the country, it can affect the financial institutions, and can actually affect the entire economy. What if people default? What happens? Moody's comes in, downgrades you. Once you're downgraded, what happens to investors? They run away. Nobody. And it becomes a cycle, a loop. So we want to create that awareness that the financial sector knows that they have a very important role to play. And then we need to improve access to comparable data on climate vulnerability. One of our biggest challenges on the continent in terms of addressing climate change is we don't have the data, the right kind of data. So the African Development Bank is investing heavily in data solutions. We've strengthened the 4 continental climate centers, and we've also established from scratch the Central Africa Climate Center, which was not there. If you have the opportunity, please go to Ngong Road here, the ICPAC Climate Center for IGA. We built it, equipped it with high technologies to be able to receive data and train people to use that data that they have received to take climate-informed decisions. But it's not enough. There's still a lot more to go. So our outcome at the end of the strategy is to say that we have this data available and we're consistent with the data. And then the third is to increase the climate competencies and capacities within the financial institutions. You have this data, what can you do with it? What should you do with it? We have, everyone says Africa cannot, whatever it is, I want to say. We know that the hurricane will come. Malawi knows that come next year, it will be hit. Mozambique knows come next year, it will be hit. We have the data. But what do we do with that data? That competency, that we can use this to create early warning systems that people will really know what to do. We had Hurricane Ida. At the same time, we had Hurricane Franny. Ripped through India, Bangladesh, and so on. And we lost 84 people. It's not as if 84 is not much, it's much. But what did we lose in Africa? Over 1,000. The same event, but we had different competencies in handling them. And then the fourth was ensure regulation, market transparency, and discipline. If the regulators are not up to speed, embrace this, it will be difficult to trickle it down to the people that you are regulating. So we want to strengthen that capacity and then want to be able to mobilize capital for sustainable development. We have the Green Climate Fund. For now, that is the largest of the vertical climate funds that we have. But when you check the number of African countries that have institutions that access those resources, very low, very little. Why? Maybe many of them we've spoken to are not fully aware of what to do, how to do it, and so on. And I know that through AFAC, We're also building the capacities of institutions to get accredited to the Green Climate Fund. And those who are accredited, many of them have not successfully submitted a project, but they got accredited. Thank God. So we'll take you one step further through AFAC. You've submitted a proposal as a bank, development bank of wherever, Nigeria, and we will work with you to see that you actually have the capability to submit those projects and then get financing from there. If we did that for all African countries, you would imagine the amount of money on its own that will flow to the continent. So that's what AFAC is going to do. And it's built on 5 pillars. The first is on leadership and awareness, very important, that our policymakers must be on the table. You don't treat climate change as something peripheral, something extraneous. Okay, let's just deal with it. It becomes center, because we can sit here and we show ourselves the way climate change can completely upturn our economies. And the second pillar is access to data, which I've talked about. The data has to be available, and we need to have access to it. World Meteorological Organization, a few years ago, published a report that says Africa has just about 1/8 of the minimum number of stations required to support sustainable development. 1/8 of the minimum, which means most times we're planning in the dark because we don't have the data. And what you cannot measure, I'm not sure you can address. And so we will ensure that there's access to data. And the next pillar is climate risk regulation. Enabling policies, environment, there has to be that regulation on it. I'll give you one little instance. For many of you that are familiar with the carbon markets, most of us are playing in the space of voluntary carbon markets, that the price range from $5 to $10. Others are in the compliance market, where the price of carbon is like $100. Why? Regulation. So if we can do it, which is what the Kenyan government has announced, the president said about 10 days ago, he signed into law the Carbon Market Initiative for Kenya. We want to see more of that from the countries. That's why we put the ministers of finance in there, and then the regulators. And the fourth pillar is on climate risk management, that we want to ensure that our institutions are adequately capacitated to address climate risks, that we can do it. And then finally, green finance, that capital is allocated towards sustainable development in Nigeria, in Africa. I'll give you one instance. But I'm right. If it works for Nigeria, trust me, to work for everybody else. If interest rate is 28% for everybody from a bank, I import luxurious vehicles at 28%. Then my good friend runs a renewable energy company that will take time to get his results back. He goes to the same bank and gets at 28%. Why would anybody, an impact investor, go to the same bank to get a loan at 28%, the same way the person that borrows to bring in luxurious cars would pay at 28%? It doesn't happen. We may be looking at differential costing, loan pricing for these things. What are the implications? Maybe some financial institutions don't, maybe they know. But we cannot drive that sustainable development when we have not put in place adequate regulations and then created a green bank. It doesn't have to be a new financial institution, but you have instruments that will encourage impact investors that are interested in sustainable development or in growing Africa in a green manner. This new strategy has a governance structure. Like we've said, we are a platform. We are not a specific executing entity. And so that platform basically has 4 key components. The first is the steering committee, and this is made up of chairs of the working groups and implementing partners, which we'll talk about who the working group members are. And those working group members, you have them in the banking, in the insurance, in the capital markets, and institutional investors. So we have those clusters of groups. The reason being, we don't just want to put everybody together as financial sector. Each group, each sector has its own peculiarities and its own challenges and problems. Then we also have a secretariat, and this secretariat will be hosted by the African Development Bank and supports the implementing partners to deliver what needs to be delivered. Then we also have the members themselves, who are the members of this institution of AFAC. This will comprise of members and implementing partners. So down there, you're going to have implementing partners, those who will actually be tasked with delivering the work. For now, we have Making Finance Work for Africa, we have GFANZ, we have FSD Africa, we have the Global Center on Adaptation, we have the UNEP-FI. It's not closed. As more people come in and can deliver projects, they will become partners. So it's going to be driven by the people within the sectors, not the African Development Bank. It could be a secretariat holding pen to paper, but the organization will be run by the members themselves. So how can we get involved? First is that we have 5 principles for AFAC, which we looked around across all the various financial initiatives around. What is it that will not be extremely complicated for the continent to do, knowing the state of our data availability, access to data, the competencies we have? Let's not scare people away. What are those 5 key things that you need to ratify? First is commit to urgent climate action, that you commit to managing climate action and risk in your organization. And third, that you commit also to integrating climate change into your portfolio, into your decisions, that you commit to that. And then the fourth is that you commit to climate action. You will do it. And then finally, that you will disclose climate action and risks. This is where the issues are. If you do not disclose your climate action and risk, it will be difficult for anybody to help you, because we don't know. It's not secret. Let's know what it is that you are exposed to. And then finally, in the years we've been, AFAC 1.0 and AFAC 2.0, what is it that has gone on? It's not as if nothing has happened. We have been able to establish a Green Bank initiative. And then the objective here is to develop specialized financial institutions to invest in sustainability. We're testing this in 2 countries in Africa, I think Benin and Cote d'Ivoire. So we're doing that to let the bankers know that it can work and it's possible, that you can lend solely to projects and programs that will contribute to sustainability. And the second is the establishment of the Africa Climate Risk Facility for adaptation. And the partner institution here is FSD, the Nairobi Declaration on Sustainable Insurance. And the third thing we've done is the partnership we've created with the Africa Financial Alliance on Climate Change. We have what we have done with GFANZ, which I'm happy our 2 vice presidents are here. We're going to sign a partnership agreement, basically a letter of intent between the 2. The beauty of it is GFANZ is focused on emissions reduction, which is very important. Africa is a low emitting continent. We don't need to be a high emitting continent. We want to remain a low emitting continent. So our partnership with GFANZ will be very important. But we also know that the Global Center on Adaptation is about adaptation. So we've entered into that partnership to work with AFAC and the Global Center on Adaptation to also look at that aspect, the adaptation angle itself. And with that, what are the key takeaways? African countries are vulnerable to climate risks, but natural resources offer opportunities for us to address this issue and build sustainable development. And two is that the African financial sector can play a lead role in this. He who has the money has the voice. You have the money. Let's put it to use so that Africa can have a voice. And the third is that the AFAC vision, governance structure, and strategy has been revamped to address more of the contemporary issues that we have. And finally, the African financial sector can get involved and participate in the AFAC industry groups for banks, insurance, capital markets, and institutional investors. We all have a role to play, whether you're pension fund, sovereign wealth fund, name them, insurance, central banks, commercial banks, even the ministry that puts up those policies. We want them to be on the table, and they are on the table. It is not common to have the bank MDs, commercial bank MDs, sit with the ministers of finance to discuss policy issues. But through AFAC, we bring everybody on the table, let them understand exactly what the issues are. In closing, I used to work in this town many years ago, and we had a minister of finance who did not care about environment issues. As far as it was concerned, environment was a sunk cost, constantly coming to look for money to do something that we can't tell what they're doing. And for 2 years, we pushed on. Please, this is what the environment needs. And he said, please, we're doing things serious here. Then there was a cabinet reshufflement, and it was posted to the Minister of Environment. The following month, he sent for me. Why didn't you tell me that this was? I said, sir, we've been trying to tell you for 2 years. He died a champion of climate change in this country. What I'm saying, it is important that we all sit together on the table. And AFAC is our platform that will bring everybody together. Thank you.
Thank you very much, Dr. Young. I guess there's a type of swagger that comes with being the most populous Black nation in the world. So you can be forgiven for thinking AFAC was NFAC, starting with Nigeria. But there you go. I guess that's just the way we are. But, you know, it's all inclusive. It's all about Africa. It's all about all of us. And as Dr. Young closed, if you think it doesn't concern you, do not wait to know who your neighbor is when your house is on fire. This is all about all of us. It's about using the influence that you have right now, when you can, to make a difference for those coming after us. And as Dr. Njoroge, the central bank governor, will always say, who was the champion of the Green Bonds program for Kenya, it's about planting coconut trees, not because you will benefit from the shade, but because those who will come after you will do so. So we've heard about AFAC, and in the famous words of a good artist, very famous close to my heart, Biggie Small, emphasized by President Barack Obama. Well, if you don't know, now you know. AFAC is here. AFAC 2.0 has been explained, and we all have a part to play. We will break for the next 20 minutes. And whilst we're doing that, we will have the signing of the letter of intent between the AfDB and GFANZ to kickstart this program. I don't want to use initiative anymore. It's now a reality. It's no longer a project. It's now an operational program which has been launched today. So a round of applause for Dr. Nyang for his presentation. So if we break for tea right now, I will employ the if you can indulge us, all the hosts, as well as the keynote speakers, as well as the panelists, if they stay behind for the signing of the letter of intentions. And after that, we will call for some group photographs just before one of us or a couple of us depart for the day. Following the break for tea, we will have the panel discussions, and we will have representatives from the banking sector, from the capital markets, from the insurance. The deputy governor will be here with us also, as well as the investor group. Thank you very much for listening to us so far. Tea is served.
لسه بقول لرشا احنا قعدنا مده برافو عليك. Give it to someone. Solomon.
Thank you so much. Yeah, yeah, working on that. Yeah, yeah.
Yes, yes.
Hey.
Can we take their pictures first?
Yeah, I'm getting the DG to join us. The DG of the Central Bank. Director General, yeah. Deputy Governor.
Madam? Johnny, you don't want to join us? Yeah. All right. Thank you.
Say hi to Audrey, Cynthia. Oops, I don't want to. It was 6+1. We didn't convert it to 7. But all of it was, how do we make climate finance work better for Africa? And it was also, how do we make sure that the rising green financial infrastructure responds to the needs of the African continent? And since then, we launched the Africa Regional Forum, where we had several initiatives, including the ones that were announced earlier. We created a partnership with NDSI and launched the Africa Climate Risk Facility at COP27. We launched the Africa Carbon Market Initiatives, which has been all the buzz here in ACS. We have launched the Aqua Fund. We have done so many initiatives with different partners towards unlocking and activating finance in the continent. And later on, we took over and launched GFANZ Africa, that Dr. Muhyiddin became the chairperson of as well. And it was through the establishment of GFANZ Africa that we are now here signing the AFAC partnership between GFANZ Africa and AfDB. It has been a lot of activities that have happened, and there's been great progress, and we have seen several of our partners announce financial commitments ranging from 1.3 billion for energy to $400 million for carbon markets. We had a carbon markets auction again earlier this year, and all this is progress given the first 6 points that we were given as a team in July 2022. And because Dr. Muhyiddin's term will be coming to an end as a climate champion at COP28, we wanted, as his Africa team and the rest of our sectoral team, to recognize his contribution to Africa's participation and discourse in climate finance in Africa, because this is our last Africa event, and it will be his last time in the continent as an active climate champion. And I want to thank the AfDB leadership for allowing us to do this during this particular session. Dr. Muhyiddin, many people yesterday during the dinner and throughout the last couple of days in ACS have sent their congratulatory messages. They have thanked you, they have written you messages, and they wish you all the best in your next journey. And thank you particularly for championing climate finance and really making sure that we change the conversation around unlocking finance in the continent. And with that, it has been a complete honor to work with you in this last couple of months and years. I have personally learned a lot from you. It's been incredible. The team feels the same. Everybody who has had the opportunity to encounter you in this last year as in your role as a champion has felt your impact, and we wanted to thank you with a small gesture. I know, it's a surprise.
As you normally do. Thank you so much. Oh.
So the box says to Dr. Mahmoud Muhyiddin, thank you for your leadership in championing climate finance for Africa.
Oh, thank you so much. Thank you. Thank you for the kind words. All right, should I open it? Any surprises inside?
There are always surprises.
All right. Fascinating.
You should hold it, Jen.
Oh, yeah, so it's, I can't do more than that.
Yes.
Thank you so much. Very kind of you.
And if I may, please call the climate champions team to also share this moment with us. Thank you.
Well, thank you so much, Bugulu. Until colleagues join us, it's a great honor to have that opportunity to serve Africa through my function as climate champion. I'd like to recognize as well the resilience and ability of Bugulu and the excellent team. Since we met, she didn't stop surprising me. I am issuing a new version of a book that I wrote on disruption. And when I was wondering about the cover page, perhaps her photo would be a nice capturing symbol of disruption in a very positive way for the good. Not all disruptions are bad, but every day I learn something from you and your ability with your team to go beyond what is expected. So there is all of that plus one without defining it. So I'm very pleased with the progress, with the partnership, and wishing you all the best. Well, it doesn't need a title to serve my continent and my country and my people. So we'll continue in the new role without the embarrassing title of a champion, but in different ways. We'll be here, especially with GFANZ, with the new with the work with the UN system, and many other ways of serving Africa, and follow up on the many initiatives. So I'll be monitoring many things, and especially about writing them. But let's have that picture. All right. Thank you so much. Very good. All right. The African Thank you. All right. Thank you. Otherwise.
Thank you very much, ladies and gentlemen. I guess we've had a bit of a session so far. Now we are trying to start the second part of our activity for the day. Now, this is the part that actually excites me. Reason being, as I said earlier, we've had the conversations and we've launched the program itself. Now we need to speak to those who will make this work and who will make this happen. And as I said earlier, we've got some working groups which have already been initiated from the banking sector, from the insurance sector, the capital markets, the regulators, and the investor group. And representing these folks this morning, and I would like to call to the stage. And of course, as we always say, ladies first. So I will start with our host nation for the day, Dr. Susan Koche, who is the Deputy Governor of the Central Bank of Kenya. Round of applause, please. Sticking with the bankers, I would like to call on Dr. Dalia Abdel Kader, who is the Chief Sustainability Officer for the Commercial International Bank of Egypt, as well as the Chair of the Sustainability Association in Egypt, Federation of Egyptian Bank. If I can also have come to the stage, Mr. Ngatia Kiruge, who is the head of GFANZ, Secretariat, and the CEO of Spearhead Africa, please, representing the investor group. Can I have Mr. Philip Lepokotie, who is a fellow Kenyan, but also pseudo-Nigerian, as well as the CEO of the ICEA Lion, as well as the chair of the NDSI Capital Markets Operators. And finally, to the stage, a very good friend of mine who only landed in the early hours of this morning from Rwanda. I haven't heard the call to come and represent the capital markets. Is the chair of the East African Securities Exchange Association, as well as the Deputy Chair of ASEA, which is African Stock Exchange Association, and the CEO of Rwanda Stock Exchange, Mr. Celestine Waboku Wabukamba. Thank you very much. Now, as I said earlier, we've spoken. And I guess at this point, we've talked about what AFAC is all about, but more importantly, why we have AFAC. And I guess you never set things up unless you actually have a problem statement. But just discussing problems itself doesn't move the agenda any further. And it's all about solutions, but not solutions in silos, but solutions as a collaborative as well as a collective. So perhaps I will start with, maybe I should start with the insurance group and ask the question that there is clearly a need for innovation if we're to mobilize the levels of funds required. Clearly, we haven't done enough yet. And there's a lot of gaps in the market, which is why we still keep complaining about the fact that we don't have the funds required. In your opinion, what are the range of financial instruments that the insurance industry can develop to implement the AFAC strategy in addressing climate-related risks and promote sustainable practices? See.
Morning, everybody. I think just before I answer that question very quickly, I just wanted to correct a title on my end. I'm the chair of the Nairobi Declaration of Sustainable Insurance, not the other one that had been mentioned, but I'm sure you meant well.
Apologies.
And so in that context, I think it's only fair for me to explain what that is, because I think it's very relevant for what we're doing, what we're discussing at the moment. So the NDSI was launched in April 2021 alongside UNEP-FI, and was hosted by the ICLIN group. And the objective for NDSI is really to get African insurers to act on risk management, operations, asset management, and underwriting in order to drive sustainable outcomes. And this is actually the conversation we're talking at the moment. I think also I should add that on a practical basis, we announced in COP27 together with the high-level climate champions, and it was very great to see some of them here, that we would cumulatively aim to have climate cover worth $14 billion by the year 2030. And therefore, I can just say this journey on sustainable insurance has already begun. And I think talking also on a practical basis on how we can deal with these instruments that can mitigate and can help mobilize funds, there are a couple of things. Firstly, even within NDSI and the industry itself, it really is dependent on collaboration, because just the way we as risk managers look to identify the risk, manage the risk, and reduce that risk, we do it by collaborating within the insurance industry, and therefore pooling those risks together is one of those elements with which we can be able to mobilize funds and to be able to mitigate those risks. I think another opportunity that I can point out, this is an instrument in terms of risk management. Previously, we had what we call peril-based risks in agriculture. So if it rained, we would insure on that basis. But today, we have what we call parametric risks and index-based risks. And we've had good examples on index-based risks. For example, there's one that was recently launched on livestock, and that depends on certain triggers on pastures. And this in itself, and ensuring that we can actually scale that up is a good opportunity for us to take on those risks and mobilize funds in that respect. So there's the index-based risk and there's parametric risks as well. And they speak to very much the same things. They're just triggered with different outcomes. Lastly, I'll just quickly say that we go back to the traditional instruments of green bonds and other sustainability bonds. And again, collaborating within the continent is going to, go a long way in ensuring that we're able to mobilize those funds. Thank you.
Thank you very much. Just saying, it's interesting you mentioned green bonds as part of one of the instruments that can be used to mobilize funds. And I know that we've had a couple of at least one issuance on the private sector in Kenya. We're looking obviously to opportunities from not just the banking sector, but some of those being supported by the banking sector. Having said that, I do believe that in October 2021, the guidance on climate-related risk management was issued under Section 334 of the Banking Act in Kenya to guide financial institutions on integrating climate-related risk management into their business decision and activities. Perhaps you can, the Deputy Governor, if you can share with us and describe some of the basic requirements that institutions were asked to adopt to entrench climate-related financial risk into their risk management framework.
Thank you. First, I would like to welcome all of you to Nairobi. It's been a pleasure having you here on the inaugural African Climate Summit. To the question that has been asked is that in October 2021, the Central Bank of Kenya issued guidelines to commercial banks and the mortgage finance. And the issuance of the guidelines was informed by the fact that we all recognize the fact that climate risks are going to really be a challenge and have been a challenge to the financial sector. And that we face three critical risks, which is, of course, the physical risk, and that is where out of climate change, we have non-performing loans. We also have transitional risks out of businesses which end up having obsolete assets, and yet they had utilized the assets to take up facilities within the banking industry, end up having those assets as obsolete. And of course, thirdly is the liability risks out of companies and institutions being sued for undertaking or having issues around in their day-to-day activities that are not environmentally friendly. Out of that background, so the guidelines were issued, and the first step was to ensure that all the CEOs of the commercial banks have been sensitized. Then secondly, climate change being a new novel field, the issue of capacity building had to be undertaken. And we got support from UNEP-FI to capacity build our staff and to also capacity build the CEOs and the banking sector. We also had a clear roadmap. The roadmap ran from June 2022 to June 2023, where initially all the commercial banks were supposed to look at 4 key components. The first one being the governance. On their governance structure, they had to come up with plans that will be driving their activities as they move forward. And most of them had to actually revise their board charters to incorporate climate risks. Secondly is on the strategy. The commercial banks were expected to ensure that in their business models, they incorporate risk management strategies to ensure that as they move forward, the risks are taken care of. And then thirdly was on risk management in terms of identifying the risk, assessing the risk, mitigating the risk, and of course, controlling the risks. And then fourth is, the fourth component is on disclosure to ensure that as they continue to report their financials, all the stakeholders who include investors, who include their clients, who include development partners, will be aware of their risk items that they are reporting, and that they are disclosing the risks that the banks are facing, and more importantly, the opportunities, and if these opportunities have been taken care of in their reporting. In terms of the progress is quarterly, the central bank has been receiving reports from the commercial banks, and so we do that on a quarterly basis up to now. And we do know that we still need to do more, especially in terms of capacity building. Thank you.
Thank you very much. Just staying with that point, clearly some of this regulatory frameworks which are out there, some of them international, globals of changing, up until recently we're talking TCFD, now we're talking ISSB. I mean, all of these frameworks impact the banking sector, especially, and all the financial sectors. I guess my question will be, so far, what are the main challenges outside just capacity building itself have you had in the reporting from the banks? Obviously, AFAC is about developing capacity, is about risk management. And I'm just thinking some of the learnings that you've had recently that you can share with us.
As you clearly put it, the number one issue, which is challenge, is on capacity building. Secondly, we also face challenges on getting the right data, because it's not really clear on to have the right templates, but on our part, and especially what the Kenya Bankers Association has been able to do, is to ensure that the commercial banks have access to the TFCD template so that they can all be able to report as expected of them. Thirdly, the other challenge is really the clear definition of the issues, whether it is issues of green financing, issues of how to get the right information, because we're still in the initial stages of identifying, for instance, in terms of financing, what are the the sectors that will constitute green financing. So it's been a challenge. So data to me is really the biggest challenge, in addition to capacity.
Thank you very much. Just before I go to the capital market, because I know obviously, that's where most of the capital is raised for most of some of these things we're doing. But just sticking from an investor's perspective, if you will, can you share with us your view, some of the things that you've actually been doing, and that is to the investors now? What is it actually been doing so far to raise capital, in terms of the investment decision-making process? And what are some of the opportunities that you've seen and which have been hindered in, what has precluded you from actually putting this money to risk?
Thank you very much. My name is Ngatia Kirongi. I run a firm called Spearhead Africa, and I also run an initiative called the Kenya Pension Funds Investment Consortium, or KEPFIC for short. At KEPFIC, what we have essentially done is we have brought together the local pension community. These are from both the public and the private sector, to jointly assess and invest into alternative assets, including infrastructure, anything that is non-traditional. So not the typical stocks and bonds that you'd find that are listed, but a wider array of investment opportunities. Now, as pension scheme investors, very similar to the banks, we are long-term investors, and we try to match our long-term liabilities with long-term assets. And as such, climate change is a real threat to our sustainability, to our ability to meet our long-term obligations, like I've mentioned. So as KEPFIC, we really look at two things, and I think you can combine them into one. Our main objective is to channel more investments into these areas of alternatives, these areas of infrastructure, for example. And that comes as well with capacity building. We don't see them as separate. In fact, what we have found is the most effective way to do any kind of capacity building is to have real risk on the table. It's a very different experience to have a half-a-day seminar where you're being taught the theory, and another completely different experience to actually be looking at a live investment opportunity, especially one where you are committing funds for a long period of time. So as KEPFIC, what we have done really is there are two main areas. On the investment side, we select the opportunities we look at with an ESG angle, and that includes the climate resilient features of these opportunities. And we recently had a call for investment proposals beginning of this year, where we received about 60 different investment proposals. We reviewed them, we shortlisted 19 of them, and now we are actively going to the market, to the pension schemes to push for these investments to be made. Now, like I mentioned, each of those investment opportunities comes with its own opportunity for capacity building. So we have the project promoters also sit in front of the pension scheme trustees and their fund managers and explain not just the economics, which is important, but also the climate resilient features, which are very critical. So that's how we get to combine the investment element with the capacity building side. And we're constantly looking for new opportunities that are aligned with climate sustainability.
So I guess a common trend here, as you all so far you speak, which actually speaks to one of the main pillars of AFAC, which is capacity building, leadership, and awareness. How are you actually, from the investor association, if I can use that word, pushing that agenda of educating and upskilling your people to ensure that you understand and integrate the right frameworks into your decision-making progress beyond, and how can this be how can AFAC facilitate this?
So first of all, it's important to recognize that the ESG element and climate sustainability, resilience, adaptation specifically, are actually, they're not nice to haves. They are actually very strong selling points for these investment opportunities we look at. So we don't have too much of an issue trying to demonstrate that or trying to push capacity building on the side of climate resilience. We don't have that. It's well understood, like I said earlier, that if you have a long-term asset that is at risk from, natural disasters or changes in the environment over the long term, that you need to consider those risks today. And so any trustee, fund manager right now, they are looking at these elements as important boxes within their risk assessment. Yeah, it's very critical for them because we have seen, and remember, we're also investors in banks, for example. So we also want to see the strategies that these financial institutions have put in place to mitigate some of these risks. So for us, capacity building isn't. That's why I said it isn't a stand-alone activity. We combine it with the investment activities, which we're very focused on.
Now, thank you very much. You mentioned a couple of things there. You mentioned long-term investment opportunities. You also mentioned the banks. Now, I'll go to the capital markets because essentially that is where capital formation takes place. One of the challenges we have in Africa today is we've got short-term available financing being literally applied to long-term investment opportunities. I guess if I look at the capital markets, for instance, Celestine, we've only had a few listed green bonds and sustainable bonds on, especially in local currency, on our various capital markets. The banks, apart from probably about 3 or 4, Namibia, Nigeria, and a couple of others, maybe South Africa, we haven't really had much coming from the financial sector. And CIB did one. So, but when you think about the challenge that we have, it sort of begs the question, and I kind of wonders, despite the enormous infrastructure deficit that we have on the continent, I guess my question is the issues of green bonds remains relatively low when compared to other parts of the world. So I guess the question is, what is ACA doing to promote local currency, green bonds, sustainability bonds issuance, especially in the African capital markets?
Well, what is ASEA doing for capital market development, first of all? We have been trying to do a lot, but the capital market is not deep enough anywhere. Leave alone the green bonds and sustainability bonds. But since we are here and it's here to stay, we have embarked on the same journey of trying to promote that. So one of the first things we've realized is that people are not aware enough. So if you don't know about capital markets, that has been there for centuries, and people are not embracing it. Now imagine talking about green bonds and sustainability bonds and all that. So it adds a lot more issues on the table of people who are dealing with it. But despite that, since we know it's there to stay and we are at the position of leading this industry at the continent level, for those maybe who don't know, ASEA, it's an umbrella of organization of the securities exchanges on the continent, and the depositories and other participants who were market participants, basically. But in our forum, we discussed these issues, and the first thing we realized is that we need to provide technical assistance for those people who need it, the specific exchanges. And with that, we have helped different exchanges to develop the guidelines, best standards for the green bonds and the ESG in general, actually, and the other initiatives. And what has come up with of recent is that everyone is trying to align, and ASEA is promoting that. And we are also trying to foster, to enhance our infrastructure that is already existing. Basically, that touches on the frameworks, but also there is need also to push policymakers and the investor community to embrace that. But we are also supporting people to do their advocacy in the different markets that need it more. Of course, I wouldn't say that there are not people who have not been issuing those green bonds. There are but a few, but the trend is positive, I think. Slowly, as you can expect from the capital market point of view, and depth, it's really still shallow, but the will is there, and we are trying to work with different partners on the continent and beyond to at least make sure we develop the frameworks necessary, the infrastructure necessary, and promotion of the benefits, especially of the GCC bonds.
Thank you very much. I mean, one thing that you just mentioned that triggered my interest was infrastructure, the need to build the right infrastructure. And just before I go to Dr. Delia, maybe I'll go back to the central bank deputy governor and ask, what technology operational adjustments should central banks actually require commercial banks to implement in order to meet the data requirements of some of these reporting standards? And how would you be looking to them to build for commercial banks to actually integrate their reporting as per your guidelines?
Okay, thank you. When you look at it, and especially when we look at issues of technology and also issues of any specific institution, whether it's a commercial bank or it's an insurance company, what needs to be looked at is what I will normally call, and most people will call, look at the 3 Ps. First is the people, to ensure that the people are upskilled, that the people have been taken through to understand the climate change, the climate risks, the reporting guidelines, and more importantly, that then after that, then you go to the processes. How do you now ensure that your processes are aligned to the ISSP, for instance, template? How do you ensure that your processes are also aligned to then the kind of data that you want to be able to utilize to make proper decisioning? How do you ensure that your processes are also in a way that every individual from the board level to the management and to the teams, and also from a regulatory perspective, how do you ensure also the regulator is able to understand and has approved your processes? Then we now look at the systems, because the systems will also be very, very important. And without proper systems, without proper innovation, without having to invest in the current innovation, then the people will not also be able to pick up and be able to do what is expected. So for me, ISSB standards actually just pushed us, and so we have an opportunity to be able to move faster. I know it will be a little bit slow. I know that we need, and especially talking about Kenya, we need to invest more, especially where we are facing challenges with some of the banks that already had not been able to put in place their proper governance or their proper strategies, and to be able to align them, and also who had not been able to do well in terms of the disclosure aspect. Yeah.
I guess it's often stated that regulators are there to safeguard the markets. But the commercial banks are the ones who are on the receiving end most of the times. So just staying with that question in terms of the capabilities, as the good doctor said to another doctor, capabilities, people, process, technology. And I guess also one of the areas we tend to forget is the governance, which is where this is. Can you, if we look at AFAC and what AFAC is actually looking to do, there are three pillars there that speaks to, we've talked about capacity, but it also talks about data, talks about risk management. Even before we start going, because bankers are not just lenders, they're also investors. From a commercial banking perspective, what are some of the challenges that you face or your colleagues face in actually implementing some of these standards, which the regulators are now imposing on you?
Okay. Thank you, Olumide. First, congratulations for Strategy 2 for AFAC, and thank you for inviting Commercial International Bank, Egypt. Actually, Commercial International Bank is very much committed to bond with African peers. We just acquired the bank in Kenya, and I'm glad our colleagues are here joining us. And we're very much committed to advance the climate finance issue in Africa. I echo Dr. Susan about the role that's being played by regulators. From a commercial bank perspective, I mean, we are in the kitchen, right? And on ground, implementing guidelines, regulator guidelines, is no longer easy. I mean, earlier, we used to respond to reserves, capital adequacy. It's finance. You're speaking our language. Now, it's no longer finance alone. It's finance plus science, plus technology, plus data. It's another discipline that we're not aware of. So this is the hard part for the regulator, and the hard part for commercial banks as implementers. And this urges a new role for both. A regulator, it will not be enough to just give guidelines to report on TCFD. Just bond with the ecosystem, the policymakers, the Ministry of Environment, and set the scenarios. Give us the infrastructure that help us. On our perspective, as a single commercial bank in Africa, that became a founding signatory of the Net Zero Banking Alliance. It was not mandated by a regulator, right? So we took the first step. We had a challenge And there was another Kenya commercial bank, also a funding signatory. So we're only 2 banks from Africa. We had the challenge of coping with methodologies and scenarios for setting our targets and measuring them that are not fit for Africa. So we had to use proxy scenarios and proxy carbon methodology approaches by PCAF that are not fit for us. So this is an infrastructure gap. We invested in ESG data digitization. We invested in capacity building, but we reach a point whereby it's an ecosystem infrastructure. And this is where AFAC can mobilize to help build a regional infrastructure, climate infrastructure for Africa that addresses the taxonomy, the definition that Dr. Susan addressed. We need to have a standardized definition. What's green bond? What's green finance? That we are supposed to report on, that sets climate scenarios that factor in the fact that we only emit 3% of global emissions, that sets sectoral emissions, sectoral decarbonization pathways, and decarbonization technology. These are all literature, operational and technological, that's not there. And this is very challenging, even if you take the step and become preemptive. If this is addressed, it will just jumpstart the transition in Africa.
So as an advocate of global standards, one who went around Africa talking about, you know, green bond standards, I hear what you say in terms of some of these things, when they were designed, were not fit for purpose for us because they were designed in a different jurisdiction. But at the same time, that's what we have right now. And what both of you have spoken to, Dr. Susan yourself, is effectively re-engineering the institution in terms of not just the people, the process, technology, and the governance. I guess the question I have for you, and when you say AFAC can, let's not forget that we are AFAC. Yeah. So, you know, one finger is being pointed forward, the remaining 4 is at us. We are the ones who are deciding this. So my question to you is, as part of this process, I mean, to scale up sustainable finance is a collective action that is needed to do this. What is the type of knowledge required to understand climate financial risk, and how, through the AFAC network, can we leverage this to close that gap for commercial banks and financial institutions in Africa?
You're bringing us to another crucial core challenge for the transition finance globally, which is the educational gap. We are experiencing system transformation. Nonetheless, we are left with an educational system that was fit for the 20th century. Okay, we witness thousands of graduates worldwide. I mean, top-notch league university graduates that are not versed in environmental and social risk management system, that don't understand climate scenarios, that don't know how to stress test and conduct risk management, and cannot develop product development, don't know how to measure the operational carbon footprint, ecological footprint. They know nothing, although they are the best graduates. If you get the best graduate from university and get him in the risk department, he doesn't know anything. So we have to face this educational gap that does not equip the financial industry to meet regulations, to meet ISSB standards, or to report on all the global frameworks that Eric Usher has been doing this. And we have been into this part. This is why I think the global financial industry, or let's speak about the African financial industry, we cannot wait for the educational system to evolve and adapt. It will take time, and you don't have the luxury of time. So we need to invest in, and this is actually what we as CIB did, and we launched it back at COP27, Sustainable Finance Academy, to address sustainable finance for sustainable development, to invest in new curriculum. And it's not just about capacity building, it's a think tank to innovate new thinking and new models, very progressive. And it was under the caption of for Africa and from Africa to the world, because we have the conviction that revising finance can take place from Africa. Now it's time, because as much as we're facing threats and crises, we are facing an opportunity of starting anew. I mean, we are, again, I repeated what I mentioned yesterday, it's a young continent. The growth is up there. And the financial industry, we have around 700 financial institutions in Africa. They are relatively powerful. And I always repeat the fact that the financial industry, the African financial industry has a clean slate. We did not cause the financial crisis, and we did not cause the climate crisis. We did not fund all the global projects that resulted in global warming and the present crisis. So we have a good record, a good track record. What we need is to have the self-esteem that we can introduce new thinking, innovate new business models into the financial industry and export it, relying on a vision, establishing the infrastructure, including the capacity building, the Sustainable Finance Academy. If we pitch, I mean, serious players who can join. If you just invest in this, I mean, the transition will promptly take place.
So it's science meets finance. We're financiers. We've clearly been to the best business schools, and that's the reason why we run all of these organizations. But all of a sudden, climatic issues are things we don't understand. But I guess the insurance companies, if I were to go back to Philip, you're the cold hand of this because you're the ones who we transfer the risks to. So I guess my question will be, leveraging what we've launched today, the network itself, and some of the things that Dr. Dilly has spoken about, there's clearly a need for us to look inwards and, if you will, localize some of this standards or some elements of it so that it's more fit for purpose. I guess, what is it that you think we should be doing collaboratively? Because I do remember that you said earlier that it's a collaborative effort. What do you think we should be doing collaboratively with the insurance, if I could use the word association, leading this drive to empower insurance or financial professionals to actually understand more of what is needed to safeguard and de-risk some of this project that we need to finance?
Thank you. And I think this conversation is good because it's very much aligned to the outcomes for AFAC, which is one of the outcomes for AFAC, which is really to have comprehensive and comparable data, climate-related data. So I think this is a good conversation in that respect, and builds on to data and how can we actually build on to a collaboration. So I think if I just give a live example that we came across recently over the last 2 years, we had significant flood claims which we were covering at ICLN Group, and after those flood claims, we had to do a risk survey and risk mitigation, and ask ourselves, how can we mitigate these, because that is part of the climate risks that we currently face. And as part of that collaboration, we engaged a couple of international partners and got signed into a flood risk satellite-based model. And again, tying it back with data, we had to map out the whole geography and then highlight where there was a risk of floods, and then work together with the insureds to mitigate that risk. Now, that was an element of collaboration, that we were using data in terms of just understanding where those risks are. And as risk managers and risk carriers, we have no option, if we want to maintain business, that we're able to mitigate and reduce that risk. So when it comes to collaboration, they're not just within the partners within the industry, collaboration with the government when it comes to the meteorological departments, also with other industry players in terms of what is it that we can borrow with pride, so that we can be able to mitigate our risks as risk managers and as risk carriers. So I think collaboration really is at the heart of this effort, and it can only help us in totality in terms of understanding the data, and also reducing the risk.
So I guess one thing we speak about here, as we always say, in God we trust, everybody else bring data. Without data, we don't know what it is we're talking about. Before I go to Ngetia, maybe I'll go to the capital markets one more time. Reporting is beginning to become more prominent. When we started this conversation 5-6 years ago, it was voluntary. Now it's mandatory. And you're also one of the regulators on the panel here. What are the things that we should be doing to enhance our integrated reporting? Because without that, obviously, the investors are still looking more of the perceived risk as opposed to the real risk that they face. So what is it that the exchanges should be doing as regulators to ensure that reporting is actually at a level that we want it to be?
I think the first thing is to do at the exchanges level is to streamline our guidelines and standards across the board, whereby everyone is speaking from the same page. Otherwise, you know, people tend to work in silos. You understand? So yet the investors across the globe are speaking one language. So we must adapt to that, basically, at first. And then time is money. We must do it now, actually, at least so that we are not in the way of those potential issuers out there or those investors out there who want to tap into the opportunity available, but not forget the planet that is really suffering. And I think capital formation or capital raise is at the base of everything we do. And if we do it in the wrong way, we end up in the risks that we started with in the beginning. So I think that's what we are trying to do at this level. We should be doing at this level.
Okay. So I know that being led by the AfDB, a partnership going on with the insurance industry on developing a new taxonomy for Africa. Clearly, the idea is to get everybody else involved because, as you said, reporting is obviously collective. And so one of the things we'll be looking to is reaching out to all other working groups to be a part of that conversation. Sadly, we're running out of time, but just before we go, if I look at AFAC and what it stands for and what it's trying to actually meet, one of the things we have, as we stated earlier, is that a lot of these taxonomy standards were written without us in mind. We were never at the table, but we are applying them. So, if you will, we don't have an African-led platform to convey the voice of Africa. The knowledge-sharing platform that allows regional institutions to share experiences is not there or wasn't. And clearly, there's insufficient coordination to date. I say to date because now we have AFAC. So I guess going forward, just your final thoughts as a collaborative effort. If you could just, you know, start with Philip. What is it that we need to do going forward now as a collective, yeah, through the AFAC mobilization? And I would invite the Secretariat to have a conversation much later so that you know where we go to. What is it that you want and you're contributing to ensure that we're not having this conversation again next year? What are the immediate tasks that we need to do?
And I'll still circle back to engagement and collaboration, because I think many of us are doing different things that complement what others are doing, and for various reasons we don't have that visibility, and we're certainly much better together if we have a platform in which we, and this particular one is certainly one of those platforms that we can sit and engage and find out what others are doing and seeing how we can collaborate so that as a continent, we can build our resilience. So circling back to enhanced engagement, enhanced collaboration, that's what I'm saying.
Thank you. Same to you, Ngetia.
So for us, I think the biggest thing is product. And our hope is that through AFAC, there will be more investment opportunities for investors like ourselves. We can sit here and talk all about climate change and climate resilience and the likes, but as pension schemes, and as investors everywhere, we exist to deploy capital. And so without product, without all the opportunities, without the instruments, our hands are basically tied on what we can do that is effective and that is measurable. So our hope is that through AFAC, and this is a challenge to AFAC and also to the transaction advisors, to the investment banks in the room, our hope is that you would see us as a source of capital, local capital, that is receptive, that is hungry for these types of opportunities. And if that is the first step, understanding that there is demand, the challenge is that now we hope that there will be supply that is brought forward by the investment community, by the banks, all under this regulatory framework, under the standards that will make what we're doing, like I said, very measurable.
So what I hear you say is alternative investment opportunities.
Correct.
Certainly, we've all invested all our pension funds in government securities so far, which we thought was safe, and it's looking like we're all going to end up with deflated returns when we retire. God help us all. So I guess because it's collective, yeah, you will be part of that conversation as a consultative backdrop to show the type of products that you would like to invest in as well, rather than wait for us just to come to you with the investment products.
Absolutely. And I think the easiest place and the first place to start is simply returns, right? Like I mentioned, we have a fiduciary duty. We are investing people's retirement funds, and where we can find that alignment between returns and impact, we're very happy to participate. But we need those products in the first place.
Thank you very much. Dr. Delia, your closing remarks.
First, Olumide, I'll hold you personally responsible for what you just said, that we will not be having this discussion next year, same time next year. This is the first thing. The second thing is to align on a vision and to leverage the power of financial institutions in Africa to get Africa to feed itself. Just this objective or this mandate. How? By aligning on a vision, establishing the Sustainable Finance, the Africa Sustainable Finance Academy, and establishing the operational infrastructure, including the taxonomy, the scenarios, sectoral emissions, all the biodiversity included. We're talking about climate and forgetting biodiversity and circular economy. We need to have a literature and infrastructure operational that helps bank deliver. Regulations enough are not alone are not enough. So let's align that the power of financial sector in Africa could get Africa to feed itself, save 300 million starving inhabitants through education and an infrastructure.
Thank you. Celestine, your final thoughts. Okay. Before the main regulator speaks here, I think I'm happy that AFAC is here and the people are speaking the same language. What we are worried about most of the time is money. Money is there. Infrastructure, she's talking about it. The regulation and frameworks, I'm sure, we get enough of that. But my parting shot would be that whatever we do, we must adapt to the African reality. Talking about taxonomy, everyone is talking about European taxonomy. But we are talking about African realities, the way we are affected, but we have African money in this room. So how best can we, merge the two? He's talked about risk mitigations, about where capital meets the needs, but also the knowing that, whatever we do, it must still be there when we retire. So I think AFAC has a lot of work to do, and we need to support it. And you need a secretariat which is functional. So first of all, coordination is very important. But whatever we do it the African way.
Of course, we can't forget the best standards and practices across the globe, but tailor them to our own realities. Thank you. Thanks. Dr. Susan.
Thank you. First, for central banks to be able to take up the lead to ensure that there is proper regulatory framework to guide the commercial banks in ensuring that they do not only manage the risks that come with climate change, but that they also tap onto the opportunities therein. Secondly is for collaboration, and especially with development partners, so that we can be able to have capacity building to the regulators and also to the commercial banks and all other players in the financial sector. And finally, for AFAC, that we should be able to collaborate together and be able to implement the 2023-2027 strategy so that we make it a reality, because therein lies the solutions to the African continent. Thank you.
Thank you very much. I guess we've heard it all. 2027 seems like a long way away, but the truth and reality is only 4 years, and it will soon come to us. And what I hear you say is that the money is here. We have $1.4 trillion under management if you include sovereign funds. But sadly, 95% of our sovereign funds are managed outside the continent. That needs to be brought home. Yeah? We talk about insurance. You know, this is where we transfer the risk. But at the same time, we need the data to ensure that, you know, our risk management processes are well optimized. Regulations. You spoke about regulations. Regulations are great, but regulations will only work if we have the capacity to deal with it. And that includes the people, the process, technology, and the governance. And you spoke about education. Education is important. It has to even go beyond just the professionals that we have today, but those that are coming soon. And effectively, we have to start even talking about not just the academy for those who are working, but even the universities, the business guys, the business schools. So, you know, there's a lot of work to do, because ultimately the man with the money, even though he wants to be impactful, at the end of the day, we all look for him because we know where he lives. When we retire and our money has disappeared, we'll go look for him. So ultimately, we're all saying the same thing. But as you said, if we need to move from just talking to action, we need to recognize that we are AFAC. Yeah? AFAC is not something out there. We are AFAC collectively. And we own the responsibility to ensure that his work. So as you're holding me responsible, one finger, I'm glad to see it, because I'm going to come for all of you as well. We are all collectively responsible. But, you know, if there's one thing that you said, you made mention of the fact that, you know, we need an umbrella. We need a secretariat that's operational. So to that effect, I would like to just invite Ms. Davina Malinga, and I hope I pronounced the name properly, to actually come and talk about the secretariat itself and how we can engage with the secretariat. So engagement is no longer an excuse. Action is where we need to be. Davina, please. If you can. And if I can have the photographers ready to take the group photograph once Davina finishes, please. Yes.
Derek, David, that's the team at the African Development Bank, but we also have members of UNEP-FI. We have the GCA members, and today we have new members, Nuran, from UNEP-FI, and our GCA colleagues are not here. That is the team that put this together. And for us, we're excited to see you, our clients, the team that we're going to be serving. You might have seen on the tables, there's a declaration form, Rosen, that you're going to sign on today, but please take it with you to your institutions to sign on, spread the message about AFAC. we were very encouraged by the response once we sent out the launch invitation of what the potential, and we've had it through our distinguished panels and the keynote messages, that really AFAC is the platform that speaks for Africa on climate issues, especially climate finance and getting the financial sector involved. So thank you very much. For us at the Secretariat, you've seen when the Director Tony was giving the presentation, they are pillars. The pillars are the working groups. So the call is that when the working groups are divided into industry sectors. So you have the banking sector, the insurance sector, stock exchanges, and the whole range in the brochure that you have. The idea is we're not trying to reinvent the wheel. If there's already work going on, for instance, the insurers already have the Nairobi Declaration on Sustainable Insurance. We're already working. They are the responsible people in that working group. And so what we are doing is to support their agenda. That is what the partners are doing. That's what the Secretariat is doing. So when you create, depending on their industry, whether you're in the banking sector, whatever work program you come up with, the Secretariat will support you to work with partners like GFANZ and the others that will come on board to now create a broader platform for engagement. So that's where we are. And yeah, it was to put a face on the Secretariat. That's me. Thank you.
So I guess the reason why I kept the panel here whilst you're speaking is so that when I come back to them, they don't tell me that they never saw you. Because we are holding ourselves responsible, you see. On that note, just before I call Dr. Ndidi Dozier to give the cry out, I would like you to thank my panels. Because of you, you being here today has obviously enriched this discussion. So if you could just give a wonderful hand to my panel, Dr. Susan Kerr, Dr. Delia Abdelkadir, Mr. Philip Lepotier, Mr. Ingetia Kirunge, and finally, Mr. Celestine Rabukamba. Thank you very much. If we could just have the photo session, and I'll call Dr. Ndidi.
Well, yes, I have my VP here, please.
No, I just want to thank all of you for coming. And to send a very clear message that the African Development Bank is going to really be committed to supporting AFAC be what it should be. We started off in 2018. COVID and other factors gave it a dip. We're doing AFAC 2.0. This journey around climate change is not nice to have. It's an emergency right now. And so I want to give you clear commitment that we're going to support the working groups. We're going to support the Sustainable Finance Academy, that we're going to work on the new products for the pension funds, domestic, and that we're going to work with the insurance companies as well to actually deepen the insurance coverage. And to my partner, I used to say my sister, Ndidi, we're also going to work with you to make sure that we take a look at the standards. And as Celestine said, we bring in the African narrative through that proportionality approach that you've been talking about and the graduated approach. But please, this is a journey we're going to take together. You have to own it. You own it through participation in the working groups. Yeah, we would underpin through the Secretariat, as my colleague mentioned. But let's make this work. Let's make AFAC work. It's for you. We will get the data, we'll get the information, we will get lessons on how all of us are actually implementing, and we will share. We would also work together to ultimately use the disclosure, use the standards to gravitate blended finance into Africa to support really the climate risk mitigation, but also the opportunities that come out of it. So I just wanted to say that very quickly. Thank you very much. It was a bit impromptu, but thank you.
If you'll allow me, I'll just quickly, because then we can just close this at the same time. And it won't really take very much time. I'm calling on Ravi, and I just want to build on my partner. He's being very politically correct. I'm going to call him my husband. And I'll explain to his wife. I also want to congratulate Dr. Susan, who referenced specifically the ISSB. If you don't know, Kenya adopted the ISSB standards yesterday. So that's it makes it the 4th African country. Nigeria was first, Zimbabwe, Ghana, and now Kenya. So congratulations for that. I think very much, if we go back to COP26, which is when the ISSB was born, and really also when GFANZ was born, and we know that there's a GFANZ African board meeting taking place just a few halls away. The idea was to create the architecture, essentially the plumbing for capital to flow. And I really just want to, and we are the nondescript, ISSB is the plumbing, right? Because without disclosures, without data, that capital cannot flow. And we've made all this effort for those standards to be proportionate so that they apply to smaller entities and so that they specifically apply for the African continent. Now, the only way to test that is to use them. I'm looking at you, Dalia, and I know that you're already testing it. And for us to get the feedback, and I think what's so powerful about AFAC and what we've proclaimed and created today is it's a Pan-African initiative. And Solomon, you and I and Dalia talked about this yesterday on the stage. We need to do this at a Pan-Africa level so that Africa's voice is louder, is more significant, and so that it doesn't just end up at disclosures and metrics or talk, but capital. And capital that is investing in businesses, especially smaller entities. And because of Scope 3, again, this is something that the whole world is grappling with. But no one will benefit more from Scope 3 disclosures, which deal with the global value chain and supply chain and smaller entities than Africa, because it brings these entities into the picture. It brings them into the game. And this thing where we say, well, Africa only contributes less than 5% of global emissions, that's a specific data fact that will serve to the continent's advantage because it is a carbon sink. And it is helping the rest of the world. And so disclosures will help make that more obvious. And from a climate-related risk perspective, should actually make capital more accessible, more affordable, and flow more. So I just want to add my voice to congratulating and saying that this is only the beginning. So really what needs to happen, which is what Davina called me out for, is we need to act. We need to move. And the ISSB has committed to capacity building and advisory support. There are significant amounts of funding out there. Climate finance on the one hand, capacity building funding on the other hand, but we need to step up and say we need it. And we need the partnership, the kind of partnership that, you know, I'm looking at Solomon now, my partner, husband, okay, standing there in the person of, because I'm going to make a very dramatic gesture and stride across the stage, you know, right now, just in a moment, African Development Bank on that side, and I'm saying this in advance of our meeting with President Additional, and ISSB on this side, essentially is saying we are partnering for Africa to ensure that disclosures are not a burden and are cost-effective means of actually unlocking capital for the businesses and the peoples of the African continent in collaboration with the financial sector and key regulators. Regulators play such a critical role on the African continent, and they are already leading. Africa needs to continue to lead. And with that, I am striding, and you have to meet me halfway. And we have to do this marriage proposal in public. And you're all witnesses. So this is our community, our family, and we're going to do a gender equity. I'll go on my knees like he does as well.
Congratulations. That's a part.
So, ladies and gentlemen, just before we depart, like every good party, as Ndidi said earlier on, there's a lot of plumbing that goes in the back end. So I cannot leave. I mean, this is being recorded, so I must not leave without thanking the following people. From GCA, I'd like to thank Sandy, Nitin, Ali. From GFANZ, I'd like to thank Team, Alex, Elaine. From FSD Africa, Kevin and his colleagues. NDSI, I'd like to thank UNEP-FI, Nukan. Making Finance Work for Africa, Marina. And from the FDB team, I would like to speak and thank Tony, Ahmed, Davina, Derek especially for always bothering me, Andrew, and Nungari. Thank you very much, colleagues, for making this happen. But more importantly, thank you to you, the audience, for coming, for being a part of this. As we say, thank you, merci, shukran, asante sana. Lunch is served on the first floor. Please join us for lunch before you go. I know you've been here all day. We have lunch served for you on the first floor. Thank you.